Insurance payroll and sales audits. What are they? Why are they important? What happens if you ignore them? And more. Coming right up. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. As an expert business insurance broker, these videos are intended to help guide and educate decision makers to help make you a more informed insurance buyer. If I don't answer the question on your mind that brought you to this video, reach out and let's connect. I'd love to hear from you. Oh, and if you like this video, I'd appreciate your comments, likes, and subscribes. So, most general liability, workers' compensation, and business owners' insurance policies are written on what is known as an estimated basis. At the beginning of the policy term, a rating basis, such as sales or payroll, is used to formulate the premium you'll pay for that policy year. In fact, most policies you'll see estimated premium used in the rate development and wonder, why is it an estimate? Why isn't it a firm number? And the reason it's estimated is because the rating basis, payroll or sales, is what is estimated. You don't know what your actual payroll or sales will be during the coming policy year, so an estimate is used. At the end of the year, an audit will determine your actual exposure basis, and if it's more than the estimate, then you'll pay an additional premium at audit. If it's actually less than your estimate, you'll get a refund. Audits are all about fairness. Everyone pays their fair share based on their rating exposures. About a month or so after the policy close or expiration, you'll get notified by your insurance company that they want to do an audit and ask for certain records to substantiate your payroll and sales. In some years, an auditor will physically come to your business and perform what's known as a physical audit, but in many years, they'll just ask you to send the documents that they need. It could be payroll records, tax receipts, ledgers, etc. What often will happen is that a client will forget to get this information to the auditor in a timely manner, so the auditor will send a reminder, and if the insured doesn't comply, the insurance company audit department will do an estimate of your sales and payroll on their own, and that'll often be 2 times what your policy started out with, so you'll get a big additional audit premium bill equal to what you already paid. So as an example, if your workers' comp premium was $15,000 for the year and you paid all that, you'll get another audit bill for another $15,000 that's due in 30 days. Some insurance companies can even be more punitive and bill more than 2 times the annual premium. Is that it? Do you have to pay it? No, not necessarily. This is the audit department's way of getting your attention, so you give them the info they need to perform the audit and give you an actual bill. So yes, the bill will be adjusted, but what I want to mention here is that you shouldn't let audits get to this point. I realize everyone is busy, but ignoring audits and getting to this estimated stage is going to throw up red flags for underwriters on your next renewal. Not only does ignoring audits cause a lot of extra work and frustration for everyone involved, including your agent, but it also increases your chances of paying more or jeopardizing your renewal down the road. Why? Because underwriters view this as what is known as non-compliant behavior, and they'll charge more because of it. And if it happens repeatedly, many insurance companies will just non-renew your account. It's a situation you want to avoid for sure. Here's the bottom line. Audits are a function of paying premiums based on your actual exposures, which can only be determined through the audit process. It's something that can't be ignored or put off, so I highly recommend complying with requests you get from your insurance company's audit department. Now, one big point here that I want to make is that if your company is experiencing great growth in payroll or sales, or both, during a policy year, I would recommend speaking with your agent about it as it's happening. Say you're seeing like 25% or 50% or more growth in month 6 of your policies, and you speak to your agent about it, they can do a midterm adjustment so that you can pay the anticipated increase in premium over the remaining installments. If you wait for the audit to happen, that'll be due within 30 days of being posted, which means your audit premium is going to land on your desk about a month or so after you just paid your renewal deposits. So you may have just laid out 20% or more, and now you've got another big insurance bill to pay. Do yourself a favor and keep this in mind for the future so you don't get stuck in this cash flow trap. I hope that was helpful, but if there are any other questions or issues I didn't answer here, please let me know in the comments below, and don't forget to give me a thumbs up. Thanks.